We're always set up for a pretty difficult day on the market, and that's because commodity prices did see a big fall on Friday. We saw iron ore prices down 4%, and we also saw oil prices down by 2.9%. So not surprising to see those two sectors under pressure. Those two sectors also in the spotlight because the Diggers and Dealers Miners Conference over in Kalgoorlie has kicked off. And of course, in China, we saw those PMI numbers coming through. The lowest number that we've seen since July 2013. New orders, new export orders falling, and hence production falling over in China. So all that having a negative impact on the market. However, it was a really quiet day, James. With the bank holiday, a lot of trading desks were closed, so not too much happening in terms of volumes. One eye, though, kept on what was happening in Shanghai, and the Shanghai Composite is down 2.7%. So that's something we'll be monitoring very carefully throughout the rest of the week. And of course, with this week of manufacturing numbers, the market's going to be betting on a bigger chance that we'll see more stimulus and support coming through from China. It's not just oil. I think if you have a look at a lot of commodities at the moment, whether it's iron ore, whether it's copper, whether it's oil, whether it's soft commodities like dairy, a lot of these commodities are trading at multi-year lows. So I think part of the concern is around what's happening in China and the impact on global growth. So we will be watching China very carefully. Of course, economies, like most things in life, do tend to move in cycles. So at some point, the growth cycle in China should start to kick in. But at the moment, there's no signs of that. If anything, we're continuing to see softness in China's economy, and these commodities also continuing to see a lot of softness as well.
At what point, Julie, do you think we start to see some sort of market support on the hope of further stimulus from the central authorities because of the weak data coming out of China, or is that come and gone?
I think what we've seen now is that we have seen a little bit of stimulus coming through, and that's expected to continue throughout 2015, but really in terms of the numbers, we haven't seen any strength coming through. So it is of a concern, and then also add into the mix the volatility that we're seeing in terms of the Chinese stock markets. And I guess there's a fear that perhaps that could be a symptom of more instability in terms of China and the Chinese economy and what's happening there. So traders very nervous around what's happening in China at the moment, and given that we're also watching a potential US interest rate hike later on in 2015, I guess there's two big areas of potential instability happening there. So altogether, unfortunately, that doesn't bode too well for the Australian market, because our market, of course, is pretty much half the financial sector and the other half the materials and the energy space. But despite the negative trend that we've seen in the commodity space, there's still some pretty strong bounces coming through. So for traders who do want to trade over bought or oversold positions, plenty of opportunity for that. I think the difficulty is for the longer term investors trying to pick the point where they're going to come into the market.
Magic $100 a share mark, Julia. Does it get there this week?
I think there's a good chance that it might. It got up to $99.90 today, so only 10 cents off that mark in its trading range. And I guess if we have a look at CSL, one of the things that it does so well is the share buybacks, which are supportive of the share price. And now with this acquisition, it does look like it's set to become the second largest influenza company in the world as well. So it does look like things moving in favour of CSL. I think in the healthcare space, you really need to divide it into two areas though. One are those biotech and those healthcare companies that are making their revenue offshore and seeing that weaker Aussie dollar improve their Aussie dollar earnings, which is a great story. But the other side of the healthcare space are those healthcare companies which are exposed to the domestic economy. And what we have seen there is a number of profit downgrades coming through in that area. So it does look like domestically the healthcare space does remain hard. So I'd stay exposed to those healthcare stocks with exposure to that weaker Aussie dollar, and of course strengthening US currency with those overseas revenue numbers helping to boost Australian dollar earnings.
Where do the childcare plays fit into your thoughts, Julia? Obviously the big news today, well, it's ongoing news I suppose, is GEM's bid for Affinity. We saw both stocks high, in particular Affinity above the offer. What do you make of it?
Look, it's great news for Affinity shareholders, the fact that we have seen the shares finishing up at 82.5 cents. Now, Affinity shares were at 54 cents before that first offer came through from G8 Education. So obviously, it's a huge positive for Affinity shareholders. We have a look at this space. So this model is what we call a roll-up model. What they are counting on is buying assets offline, off the market, which trade cheaper than assets on the market. So when they bring on these assets, buy these assets which are off market, it onto the market and roll it into their structure, naturally the value of the vehicle increases. So in the case of G8 Education, those acquisitions that they're making of childcare centres that aren't listed on the ASX, rolling it into the ASX listed vehicle, which is G8 Education, means that value is created simply by rolling those vehicles into G8 Education. Of course, recently they have seen competition coming through because of Affinity, another childcare model which is around about the same model. So the fact that we see a merger of these two companies probably a positive in the long run. However, in the long run, as this industry is quite mature, you run out of targets to be able to acquire, and so then you have to question where that growth is going to come from. Is there enough organic growth to continue on the growth path that these companies are hoping for, or will they have to look overseas and add in extra risk in terms of their business model? So I think an interesting space, a very attractive space, but in making it work, it has become more difficult in the last few years as the industry has matured.
Rick,